My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other than to make friends, I'm just trying to make you a little money. My job is not just to entertain, but to educate, put it all in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Oh, we dodged a bullet today when the big monthly unemployment number came in fairly hot with big job creation numbers, 199,000 in November, causing the unemployment rate to fall to a lower than expected 3.7%. Just enough for us to say the economy remains healthy without much inflation, as wages didn't rise too much. That means the soft landing thesis is alive and well, giving the averages another reason to rally, with the Dow gaining 130 points, S&P advancing 0.41%, NASDAQ climbing 0.45%, because we're just not that all worried about the Fed right now. Which brings me to the game plan for next week, because on Wednesday, the Federal Reserve tells us its next move, coupled with Jay Powell's press conference. Now, anyone who's watched this show knows where I stand on Powell. I said it wasn't his fault that things got overheated in America, because it happened everywhere else, too. He took the tough action he needed, rapidly jacking up interest rates, and now he's almost brought back inflation to the Fed's 2% target. Right now, there's one thing that rankles me about all of this, though. No matter what happens, there are plenty of traders who love to play this ridiculous guessing game about the Fed's next move. You cannot pay attention to these short-time blowhards. For example, at this moment, they're frantically trying to figure out if this morning's job numbers will keep the Fed on hold, not eager to cut rates anytime soon, which is the prevailing wisdom. The prevailing wisdom, people, is wrong. I don't want you to get caught up in this ridiculous sideshow. Right now, good news about the economy is good news for the stock market, because the Fed doesn't need to do anything. Powell is winning the war against inflation, and that's all that matters. As long as Powell's winning, meaning the economy is still creating jobs, relatively low wage inflation, he's fulfilling his mandate. He doesn't need to cut rates. He doesn't need to raise rates. At neutral position is enough to justify sticking with our stocks here. How about these individual stocks? Now, on Monday, Oracle reports after the close. Now, normally this wouldn't be all that controversial. It's a solid software business that trades at a reasonably low price-earnings multiple and almost never misses its earnings. But last time, Oracle disappointed, and the stock started a sickening plunge from $126 to $100. A real tug-of-war ensued here between those who think that the company massively overpaid when it bought Cerner, a kind of second-tier electronic records company, for $28 billion just 2 years ago, and a second group of voters who think that this Oracle is going to leverage this huge data center group into a generative artificial intelligence powerhouse. In the end, the day the company reported, the naysayers won. But ever since then, the whole market bottomed in late October. The stock's been working its way higher because Wall Street's fallen back in love with AI, including their AI. Now, we've taken a position in the stock for my charitable trust, and we think that the AI bulls this time will be proven right, especially because legendary founder Larry Ellison remains very involved in the generative AI transition. Last Thursday, I got a call. It was in the lightning round about Carrier. And I said I thought it was a darn good company, but people are worried about its German heat pump acquisition. It's a big acquisition, $12 billion. I have faith that CEO Dave Gitlin can work it all out, especially now that he sold a security division to Honeywell this morning for about $5 billion. But I also said you might want to take a cleaner story, a similar business, Trane Technologies, TT. The other major climate controls play, though, is these guys, Johnson Controls, which reports on Tuesday. I've avoided this one, maybe even like the plague, because it doesn't have any growth. That said, the stock's down more than 12% for the year, and it's much, much cheaper than Carrier or Trane. I don't know. I'm going to take a look at it. Wednesday, as I mentioned, of course, is the Fed day. Then after the close, we hear from one of my favorite companies, Adobe, which is on a mission to make generative AI work for everybody. Democratization, not just for the big enterprises. CEO Shantanu Narayan has consistently delivered amazing returns. I don't think that's going to change. I think it'll be the same. Although there's often a battle among traders the moment the numbers come out. Some of that's because there are so many artificially unintelligent headlines that immediately cause computer-driven trading to take place, and stock goes up or down even though you can't make a serious judgment about the company because you haven't even listened to the conference call. This time, though, there may be more to the company than the quarter. See, more than a year ago, Adobe decided to buy a design platform company called Figma. That would be a terrific, albeit expensive, fit under its roof. Now, I actually think the Figment deal is worth the $20 billion price tag because its tools are so beloved. Oh, but the antitrust regulators, both here and Europe, they can't resist. They seem to be digging their heels against the deal, arguing that Adobe should be competing against Figma for the good of the marketplace. Well, we may learn whether Adobe walks away. Could it happen? Maybe. How about Thursday? Oh, yeah, two best-of-breed operators, Costco and Lennar. Now, Costco's quarters are actually pretty anticlimactic. You see, they report monthly numbers, too. I tend to listen more to what they have to say about demand and inflation and the economy. We own Costco for the trust, and while I'm aware that it could go down, the stock's been a rocket on any given quarter. I don't think it's worth it trading in and out and in and out. Stock just doesn't dodge an errant. Don't worry about it in a couple of months here. Now, I'd much rather give them the benefit of the doubt because they deserve it. When I went to Amazon earlier in the week, I was conscious that Seattle houses not one but two companies that I quite willingly pay more for. Amazon with Prime and Costco with my club membership. Oh, and neither of them has a problem with shrinkage. You can't steal from an online company. And Costco is a club where you need to pay to join. What kind of thief pays a membership fee when they could just steal from practically anywhere else for free? Last night I told you about how Toll Brothers is doing incredibly well, but while I was praising them, you know what I did? I realized I might be giving another home builder short shrift. I'm talking about Lennar. These guys have been building high-quality homes and making their shareholders fortunes for ages. I expect Lennar to do maybe even better this time. The stock's run. It had another leg up after Toll's blowout. But if the Fed takes a softer line on its fight against inflation on Wednesday, then maybe Lennar on Thursday could have another big leg up. Hey, finally on Friday, we get results from Darden. Now, there are a few companies that have a better handle on what people are doing with their discretionary dollars than these guys. We keep hearing from retailers and restaurant chains, one after another, that the consumer wants value. And Darden's Olive Garden sure offers that. Plus, they get very granular on their conference calls, so you can learn a lot about the price of labor, food, construction, all sorts of inputs, rolls. You know, because you can take them home. You just have to file wet. As for the stock, I don't know. The cross currents right now have gotten very tough after that dust-up with American Express, talking about a more cautious consumer during the month of October. And then that stock took a real hit. So when it comes to Darden, I got an idea. Let's put the conference call on mute and just listen. Here's the bottom line. You need to remember that we're in one of those moments where if the Fed doesn't even get the message out perfectly, the actual headlines today box them into continuing their hold'em strategy. And that, my friends, is just fine for the bulls. I feel like taking some calls. You know that? I said we go to Tom in Massachusetts. Tom!
Booyah, Jim.
Booyah, Tom!
Jim, thank you for all you do for us home gamers. You're the best.
Oh, man, are you kind? You just started my weekend well. How can I help you?
All right. Jim, I'm calling about a company that provides an essential service. This company has 16 consecutive quarters of year-over-year growth exceeding 40%. And now, with interest rates falling again, this should spur more lending activity, which will provide a catalyst for their business. Jim, my company is FICO, Fair Isaac Corporation.
Your company is fantastic. I should be recommending it. I probably should own it for the trust. But you know what? It is expensive at all times, but I think you've got a beat on it. I like your thinking about FICO. All right, please, don't fall for that parlor game of trying to predict when the Fed's going to cut rates or not. Right now, Powell is winning the war against inflation, while the economy is still creating good jobs, which is a recipe to keep, let's say, him on hold and stocks going higher. I'm Money Time. Earlier this week, I had a chance to sit down with Amazon CEO Andy Jassy in a rare and exclusive interview. So don't miss an encore presentation of my time with the man behind the company that is changing the world. Then, while out west, I got a chance to really experience the future of AI. And no, it wasn't in Silicon Valley. I'm recapping my trip to Seattle and sharing the very important takeaways from being on the ground with some of the biggest minds in artificial intelligence. And of course, all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.